But let's get going. Welcome back to the episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate the like. If not, consider subscribing. Today, we've got some pretty wild price action going on, so we're going to start on SPY for sure. I gotta tell you, last night, I accidentally, before market close, I bought 2 puts on SPXU, which is the opposite of SPY, moves inversely of SPY, and I was kind of beating myself up for it, but hey, it turns out CPI data came out, and it was bad, but not as bad as forecasted, and so I guess that nets a positive, and markets rallied. So I took profits on those right away as markets popped higher, and then at the very peak here of this little rally, I said this is absolute BS, and I entered into some SPXU calls, which is effectively bearish SPY, and sure enough, price has started to move down, and I'm up 160% on those contracts, but guess what? Because I moved my account from cash to margin, I don't have any day trades, and so I can't take profits. What? And so I'm sitting here and I'm just looking at these profits and I want to take them, but I have to wait until tomorrow. But I think it's going to be okay because honestly, I think the markets are going to continue to push further, and this big pop we've seen, this is just the price moving through a corrective phase, and I've updated my Elliott wave count to reflect that. This is, after all, what I was expecting was a little sideways grind, a little pop, which extended, very normal, and now we're going to see the continuation of that downtrend occur. Here we go, looking at SPY, reaching a target just now at 446.94. You saw that target reached live right now if you're tuning in. I can't really tell if anybody's watching. I don't know. Looks like we have one viewer. Hello. I'm not going to be looking at the chat right now. I'm just going to be going through and doing the analysis, making the videos. Whew, you can see that implied volatility here is increasing as price is dropping. Let me scooch that over for you. This tells me that motive, or the trend that's going to be making progress, is currently correlated with the price, and the price is heading down. So the downtrend is negatively correlated with the trend in the implied volatility, which is bearish. That might be confusing. I do a lot of this negative, positive, and you have to figure out what the sum total is there to figure out which way I'm really pointing it. Maybe I can just be a little more simple. Anyway, let's back out into the hourly time frame. We'll get to the meme stocks here, but really there's not a lot going on. I will show them, but for right now, I want to go into the hourly time frame on SPY. And you can start to see the way that this pop has been going. Am I on the right drawing set? I'm really not. Let's try to find the right drawing set. Sometimes I open Thinkorswim and it's not on the right chart drawings. It just drives me nuts. Oh man. Yes. Okay, this is this drawing set. Here we go. I'm following what's called a leading diagonal triangle, which a lot of people call a falling wedge. Now, I've made a video about fake chart patterns, and essentially what I'm doing, I'm just describing how you can use chart pattern analysis inappropriately and get wrecked. This would be one such pattern that is supposed to be bullish, but if you do the Elliott waveform analysis and analyze the wave form between opposing trendline touches in that pattern, you're going to suddenly realize that this is actually a motive wave, a wave of progress that pushes down. It is followed by a corrective wave, which is inherently sideways or counter trend, and then we get a continuation following. This big pop we saw this morning, I think, is wave C of wave B, and you'll see that I have wave B here labeled. I do not like wave B, so wave B is for bitch wave. It's official. That's what I'm calling it. So we've had 5 pushes down, 1, 2, 3, 4, 5, where we've had an overlap between the bottom of that first wave and the top of the fourth wave. This is characteristic of the leading diagonal triangle. And then we had a motive wave down for 5, which was characteristically similar to the first push down. These are tendencies and rules of this pattern, and this is why I've been calling it this way. We've moved into an extension sideways, where we bounced up higher for A, which I forecasted perfectly, and then we moved into a B wave, which I hate and almost always get wrong, and almost everyone does, because that's what the B wave does, is it creates a tremendous amount of uncertainty. And then the big pop higher for wave C, completing wave B, and this is of course an A, B, C wave down on the higher wave degree. That's how these waves work. And so I'm going to take the initial impulse, go to the top of the corrective wave, and once we pass a new low beyond 446.73, the target's 438, and I really think 431 is where we're going. You can see that there's a bullish reversal level confirmation from forever ago, way back here, that we passed, back tested, and then pushed much higher off of. And I think we're going back to that level. This makes a lot of sense, especially when you have these extension tools pointing at these similar levels. We call this confluence. It's pretty common that we get that. You can see that we've almost completely lost the entire rally today. That started this morning off of that, quote, good news that inflation's too high. Like, what? I was like, that's such bull crap. That's going to reverse. And it is. Here we are. You can see now we've got this massive bearish wick on SPY, the daily chart, above that downtrend. This is nuts. This is exactly what I'm looking for, and I'm hoping to see this turn into a big bearish engulfing candle of this of yesterday's candle, but we probably won't get there. We're probably going to find support near 446. You can see markets starting to pop up now a little bit. We reached that corrective target, so sideways grind for a bit here. This did a number on the SPXU call that I'm holding for January, and I'm like not very happy about that. Trust me, I'm really not. But that's okay. I have some SPXU calls expiring tomorrow also, which are doing really, really well, like I said. I mean, this is a classic head and shoulder top right there. This marks to me the top of this motive wave. We'll be turning around here in short order. Well, I say short order, and I mean relatively, because we could just as easily get this big, grindy, annoying triangle through here for the rest of the day. So be ready for that. Watch that. Momentum indicators are going to be all over the place. There's going to be a lot of divergences, and I don't think you're going to be able to follow any of that. I really, truly believe that SPY is getting ready to crash. Let's go check out some other charts really quick. You know, fine. I'll show AMC and GameStop. I know people want to see these. Again, AMC is just bouncing between levels of support and resistance, grinding sideways. This is exactly what I've been calling for the last like couple of weeks, and we're seeing it. So whatever. I just feel like I have to show this because most of my channel is here because of AMC. Ape, similar story, going sideways, barcoding a lot, which makes a lot of sense. And GameStop, same story. Here, it's better to see GameStop moving sideways because it hasn't been grinding sideways. It's actually been in a pretty steady downtrend, and we've been reaching these targets, looking for the bottom of a C wave. Once the C wave ends, we could get a sideways correction and then one more push down. And that would be characteristically similar to this first impulse heading down, and that could lead us to this extension at 1810. But I don't want to call that yet, and I don't really know what the confirmation price target is. I'll have to look at this chart a little later when I have some more time. But those are the meme stocks. What I really want to show is the dollar. I'm going to flip back into a line chart here, get all that red and green off of there. Here we go. So I'm showing the dollar on the hourly time frame as in a leading diagonal triangle. Again, this leading diagonal triangle is different than that on SPY because it's inverted. This one's tilted up. The supposed rising wedge, which is supposed to be bearish, but the leading diagonal triangle is not so simple. Again, if we analyze the form between opposing trendline touches, you're going to see there's an alternation between motive and corrective waves, which produces multiple wave extensions in agreeing with the trend of the pattern. And here that's up. Doesn't mean, though, that we don't get a corrective wave after that motive impulse. And so what we're looking at now is an ABC correction through which I believe we might find a horizontal triangle, but it wouldn't be appropriate unless it's wave B. And I have it counted as wave 2. So if we do find ourselves in a triangle through here, we're going to need to change the motive wave count to A instead of 1, but I'm still going to hold on to 2 for now. I don't think we're going to find resistance here at this upper trend line. I think we're going to blow through it and the dollar is going to skyrocket. Of course, as inflation continues to rise, dollar strength will likewise need to slow down the economy, which is brutal. Let's go look at T and X. This is the 10-year treasury yield. I also identified another leading diagonal triangle here as well. It's a little different. It has a little different look to it. You can see that the fourth wave through here pushed sideways out of the pattern, which is very common for wave 4. Wave 5 set new high, did not overthrow the AC trend line, which is this top trend line, and we did have a very short, brief correction. It's very possible that we're actually looking at waves A, B, and C. T and X, 10-year treasury yield. Treasuries. Oh my goodness, don't even get me started right now, but I think that we're going to be watching some serious volatility start to come into play, and the bond market may be at the heart of the next financial crisis. We'll see. So that's dollar, T and X. Let's go look at some of the big stocks. I identified Apple as in a diamond, which is not always a bottom. A diamond pattern is very easily and much of the time often part of a half staff formation where I apply that measure rule and I look for that similar push down. All right, so let's just take this high to this low and let's just look for that 100% target. It's at 163.38. This is incredible, and this diamond might be our B wave. That could be it, and we could be pushing down. We're already starting a breakout at this time, and if we get another push lower and then back test 177.33, we could see this big strong push down. This is intense, and this will definitely impact SPY. Apple has a very heavy weighting in SPY, the ETF of the Standard & Poor's 500 Index. Okay, let's go to Tesla next. because Tesla is grinding sideways still. It's not producing the same kind of dramatic move that Apple is. There's probably a lot more bullish sentiment in here than in Apple, and you can see that we've had downward breakout, we've set new lows, we're just very slowly grinding. This is probably a series of expanding and contracting patterns, making the count nearly impossible to figure out. What I think I should do is back out into the daily time frame, maybe do a more broad analysis, but for the time being, I think the best way to see the chart is like this, where we've had this breakdown and we're maybe looking at waves 1, 2, we're looking for 3, in which case, once we get that new low, our price target is going to be 235.21 to 22.494. Of course, 230.88 is the target from this initial impulse. So this is still our target. We're below bearish continuation. Price pop back up near there, is pushing back down. We're going to at least test this uptrend, which is something I was saying way up here. We've definitely found some downward action in Tesla and Apple. We'll go to NVIDIA next. I've been calling for that top. We've had that top, and price is now turned around and is spinning on the target 425.98, as you can see here. And we're now starting to set a new low after a pop higher. You can see that we have two similar corrective waves through here, which tells me that we're probably moving through a wave extension. We should be looking for an alternation in forms of corrective waves. So when we get back-to-back forms, I'm thinking to myself, we're going to be extending. This is probably the beginning of a longer-term dump, which seems really, really weird, especially since graphics cards, such a high demand for graphics card. I was just reading an article, and I believe there was some demand in China for like $8 billion of NVIDIA graphics card. Anyway, price drops. And if you're not following the news, you should be, as the White House has officially banned the investing of in China-based AI tech, I think it is specifically, over security reasons, which is like, I mean, if you're following the news, watch China very carefully, both in their economic data and their geopolitical, we'll call them behaviors. Let's go to AMD. AMD moving sideways, not much to see here. I'm supposing we're probably in some sort of triangle, which make a lot of sense. Not much new to report here. I want to look at something that Stock Ed brought up in his channel in the Discord, AEP, American Electric Power.com Inc. Whatever, I don't know what this is. But we've got this downtrend through here, and we've had some positive earnings recently. Is it a buy? Is it a sell? Well, let's zoom way out, and you're going to see that I've started an Elliott wave count through here, and I just started on the cycle degree just for the hell of it. It's easy. I'm supposing that in 2002 we found the bottom, and we're starting waves 1, 2, 3, and in 4 of 5. Okay, so I'm leaving a note for myself here, 8, 10, 23. I'm bullish. I think Stockhead is as well. I'll have to go back and read his post. But this is where I got that symbol from. He analyzes a lot of the stock option trading, and it's great stuff. So far, Stock Ed and I are on the same page. It's generally right. It's generally right, which is incredible. I love having someone to supplement my analysis. It's amazing. So if you want a link to the Discord, just ask in the comments. I'll provide the link. You can come in. The Discord's on lock pretty tight. I don't like to have a lot of people in there. I really like where it's at now. I want to be able to participate in the community. I don't want to be drowned out by memesters, basically. At any rate, I think this is mostly what I wanted to go through today. Of course, Playboy had earnings, and no, they were not good. They were very bad. You can see that's pretty much what the price is reflecting. So I took a loss on my calls this morning. I was very aware of that, so I didn't risk too much. I'm going to hold my shares, I think, for a bit longer. Overall, if the company can't turn it around soon, then I'm going to have to reverse my position and just let go of it. But I'd rather not. I'd really rather not. I would really like to hold something long for the long haul. But, you know, it just seems like being quick and nimble in the market's the way to be. Let's go back to SPY really quickly. This is where I'm going to be hanging out until I need to leave for the day. It looks like we are starting our grind through here. Again, if I were to do a motive wave count, it'd probably be 1, 2, this could be 3, 4, 5, A. This could be a B wave setting a new low. And we'll get C coming up here. And it's going to give us a funny looking flat. From there, we could push lower or extend sideways. I'm not looking for a lot of movement for the rest of the day, but I would like to see and I call it a gap filled. Now, we talk about gaps, you know, price gaps are pretty easy to spot on the chart, right? You get a little empty space between trading days, but, you know, when price gaps up off of a red candle, it doesn't leave that same gap, but there is definitely still a distance between the close of the previous day and the open of the current day. And I do call this a gap because we do have missing price data in normal market hours. So I'm anticipating that it's going to be filled. You see the candle's red. The volume here is green, but that's just because the current price is above the closing price of yesterday. The RSI is also reflecting that coming up, but again, it's because the price is currently higher than the previous close. The RSI is taken only from the close. It's unrelated. It's completely unrelated to the volume. We're going to see, though, what happens. If the RSI can flex back up and close above 50, then we'll have to start talking about, bullish scenarios. But honestly, this is